YouTube here for me so I can see the comments. Okay, now you can start. Yeah, I started. Yes. See, so well. Okay.
But nobody's in. They don't have the. Do they have the same link?
Yeah, yeah.
You deleted the link forever. No, that one. Not the same.
No, it's fine. Okay.
One person.
Hello, everybody. Okay, we had some technical issues. So I bring it up a little bit. Okay, so bring up a little bit. Yes. Okay, everybody, you know the drill. Okay, come in and say hi. Oh, great. Okay, I can see the comments now.
Yeah.
Everybody come in and give a lot of thumbs up. Say hello to Sam. You don't say hello to Mr. Lu. Never mind. You must say hello to Sam. Okay. Hey, hello. This is mega big shot. Okay. Yeah. So it took me in human. I don't know, blessing to be able to get him here, okay? Yeah, he's running a mega big company. To be able to come to a small fry channel like mine is a big thing, right? So, so everybody please say hello to,
Lu. It's an honor to be here with Mr. Lu.
Okay, everybody comes in, inform everybody, 1865 please, yep. Okay, everybody on Premium Mall, please say hello also. Siu Ching, good to see you. Yes, okay. Yeah. Catherine, good to see you. Yes.
Hi.
Okay. Right. So, okay, I want, thank you. Okay, thank you. Yes. So, everybody must hit a thumbs up. Okay, must hit a thumbs up. Yeah. So, Sam, when was the last time we did this? In person?
I don't know. It was a few months ago?
No, in person. The last time when we did,
one was virtual.
It was virtual, yeah.
I forgot.
Yeah, it was virtual.
I thought we did it together.
I was in Italy and you were in...
When was the last time we did this in person? About a year ago.
Wow. A year plus ago,
long.
Right?
I didn't realize. Yeah.
So guys, we haven't seen Sam for many months, okay? I love Endowus because of Sam. I thought you love Endowus because of Mr. Lu. Yeah.
Both of us.
Yes.
We don't have to compete.
No.
I'm very happy to see Lu, but I'm also more happy to see B and Kate.
Yeah. Okay. Yeah. So, okay. Okay, everybody, you know the drill, right? Thumbs up. Okay, thumbs up. Yeah, thumbs up. Now, so today it's so just now we had a lot of trouble setting the system up. So my apologies.
Sorry.
Okay.
Yeah.
I don't know what happened. I just know what happened. Okay. Yes.
It happens.
It happens. Yes. So everybody, please give a fierce amount of thumbs up. I want to see 500 thumbs up before I start. Okay. We're gonna juice Sam dry. I'm not gonna let him go this time. Okay. I'm prepared. I'm armed with $100,000 to fire. Today I will fire right in front. Many times I cannot fire. Now I can fire because we are in a premises of Endowus. Okay. Yes.
So much pressure.
Yeah. So, but I need to ask 50,000 questions first to make sure that my $100,000. Yes. So everybody comes in if you want to know what I'm firing. Oh, you're watching from Japan.
Yeah.
Wow.
From
okay.
Japan.
Wow.
Amazing.
Okay. So, yeah, can fire because Sam says so. Yeah, but he's gonna be careful because
so much pressure today.
Yeah. So if I lose money, I'll ask for a chicken rice from him.
Oh,
but he
that one I can do.
He just treated us the siu yok. Yeah, that was really good. The char siu and the siu was really nice. I'm so full right now. Okay. Yeah. 500 thumbs up we start. Okay. 500 thumbs up. No less. 500 thumbs up. Okay. Yeah. So first disclaimer. Okay. First disclaimer is Mr. Lu is a very small investor of Endowus. Okay, very small. I emphasize a very small investor of Endowus. So a very small shareholder in Endowus. So I better declare first before everybody thinks that And today I managed to get a special is it a sign up offer?
Special voucher, discount voucher.
It's a discount voucher.
Right. Yeah.
$60 for who? New user. So I don't get.
No.
Che, I thought I invest today, I get $60 off.
Mr. Lu too rich.
Yeah, okay.
To get free voucher from us.
Yeah. So everybody, yes, please give thumbs up, okay? Thumbs up. Okay, now I'm 300. I got 200 more to go. 200 more. Sam looks great. Must be using Mr. Lu's products. I sell skincare, right?
Yeah.
But he's Korean, but he's complicated. Yeah, it's how many percent of you are Korean?
100%.
No, you are all over the world, man. Yeah, he's like 45% Korean, right? But how many years you stay?
Culturally, I'm like less than 10%. I don't know.
How many years you stay?
30%.
How many years you stay in Korea? Oh, your whole life?
Like 12.
12. And
out of 53.
Oh, 53 is 12. And then the other one is Hong Kong, right?
It's Hong Kong 7, England is 13, I think. And then
Singapore is
21.
Oh, so Singapore is longest.
Longest.
Yeah, Singaporean. Okay, yeah. So he's Singaporean right now, right? Yeah. Mr. Tang, good to see you. What does that mean?
Really?
What does that mean?
정말. Really?
정말 means what?
Really?
That's really? Oh, wow. No, that guy is a Korean for sure.
No, he's not. Is it?
Dan, are you a Korean? Dan, are you a Korean? I think Dan, you're a Korean.
First time we've seen Korean in 1M65.
No, we have got people all over the world right now.
That's true.
It's we have got hey, until I see 500 thumbs up, then we start. Today is very important, okay? Okay, that's is that how you spell?
Anio means no.
No. Okay.
진짜 is really.
Okay, really. Okay.
Yeah.
So Sam is Korean. He speaks to his wife in Korean. Your wife's Korean, right?
Yeah, but she grew up in the US. Yeah.
So you see, you guys are
all over.
Yeah, they call it Rojak. Yeah.
Rojak.
So you know Rojak, right?
Rojak.
Yeah, it's Rojak. Yes. Okay. Yeah. So I have 130 more to go. 130 more thumbs up. Today, what we're gonna do is that I'm gonna juice him dry. First of all, Sam, you know Sam is an investment guru, right? Okay. We have only that few investment guru that I invite to my channel, right? So we invite him. We invite Christopher Tan. We invite Mr. So Chin Heng.
They're all good friends of ours.
Yeah, they're all good friends. Actually, that's all, no? That's all, actually. Yeah, in terms of investment. So can you see, right? He's so precious, right? And all of them are busy people. Now he was the ex Morgan Stanley asset management CEO. Am I correct? The title?
Yeah.
Yeah. So he is really guru great. Okay. So I'm Hao Xiao great now. You know what's called Hao Xiao great? This is a Hokkien phrase. Is it BS great? Okay. I'm BS great. He's the real stuff, right? So some of us say, Mr. Lu, you only paper investor, study economics, think that you're very good. That is true. But he's a practitioner, okay? And today, he and Greg and a few other co-founders built up Endowus to this mega-sized company. When we first started off in that shop house, right? Remember? We were discussing the launch plans. I did a workshop for you guys.
He's a marketing guru as well as investment guru. Yeah.
Well, actually, people don't know that. Okay, yeah, but no kidding. Okay, I never in my mind thought that there will be this big mega size. Actually, do you ever thought of that?
Yes.
Really? No. Wow, really?
That's why we did it. Yeah.
That's amazing, man. Yeah.
But that was what, 7 years ago now.
Yeah. Is your AUM declared already?
We announced when we announced more than 10 billion Sing dollars. Yeah.
10 billion dollars asset under management. 10 billion, and what I remember, you announced some numbers that the profit gains from these investors were some big numbers.
I think we were like $600-700 million profit for clients. Yeah.
So $600-700 million of profit that they made for their clients. You heard that? Yeah, they made so much money for their clients. I'm one of the most happiest customer.
Because you did it right.
Yeah, I'm one of the most happiest customers. Okay.
Lou knows how to do it right.
Yeah. So I know for those premium mall customers, I always ask you to spend money. Today, we have got special guests here to teach you how to make money. Okay. And for those people on 165, we have gone a long journey with you guys. You know Sam from the start. We always speak together for how many years already?
7 years. Yeah.
7 years.
Yeah. I mean, before you started this, we were doing it at. We did remember that SGX.
Yes.
Yeah, podium. That picture you had earlier.
Yes.
Yeah, Lou and I spoke together on that event. There's lots. Yeah, we spoke almost a few times every year. Yeah, in different events. Yeah.
So it's very important everybody take advantage of this this opportunity. Okay, I'm now 50 short of thumbs up. Okay, no 500. I don't start. So today, what I time to shut up and take my money. So right now, today we are gonna fire another $100,000 into Endowus. Okay, actually I fired quite a lot this month, right? Yeah, I fired. I fired 250,000 USD just a few days ago. Okay, so very soon I'm gonna cross 2 mil. You know. Yeah, so it's not small. So okay, Frank Tan said good evening from Melbourne. Okay.
Hi Frank.
Well, thank you for Endowus, a happy customer. Glad you're here. See, we've got global reach right now.
Christina's saying I'm quiet, so I'll speak more loudly.
Trust me, I'm going to juice him right. Later he will talk, I'll shut up, okay? Number one, today, I want to ask him, what's his view of the overall climate? Okay? It's a very chaotic world right now. Have you ever seen a messy world like that? It's not crisis, it's messy. You're right, you agree with my word.
Yeah, it's messy and uncertain, it's volatile. You're talking to people that have gone through the Asian financial crisis in '97. I've gone through the global financial crisis in 2008. So, you know, is it as bad as that? No, right?
You understand the Hong Kong phrase "sub sub soi," which means you have heard it before, which means that this is nothing.
Yeah,
it's nothing, right?
It's nothing, but it's not nothing, but it's just different.
It's just messy. I think
messy and different.
Yeah.
Then it's not, so if it's not an outright crisis, but yeah.
Okay, so this one is. So this one is the first question I ask him. Second is what's he doing right now for his own money, right? That's always ask him for his own money. And the third thing we want to do is to ask about the bonds opportunity. The last time, do you remember he came here? He told us to look into bonds, and so I did. Okay, and those who, kind of follow him that time, okay, you have made money by now, man. Okay. And today I want to ask you your opinion, and then I'll fire. $100,000 ready to fire. Okay, this is not kidding, huh? So continue to give thumbs up. The more thumbs up there are, the more audience there will be, and the more he will review more kung fu. Yeah. Are you guys ready? Right? Okay. Right. Good.
Let's go.
So Sam, this is a.
Oh, who's CF?
I know. Yeah.
How do you know?
You will do Q&A. Okay, so after that, we'll do Q&A. Okay? So first half an hour is about me interviewing him. After that, we'll do hardcore Q&A. Okay?
Yeah.
So Sam, this is a messy world. We got tariff war. Okay? And the tariff war comes and goes and comes and goes. Okay? We don't even know where it is right now. The stock market go up, go down, go up, go down, go up. Now we're about to hit all-time high again. And there's inflation fears, there's recession fears. And have you ever thought about the wars that are going on right now?
Yeah.
What's your take of the whole thing?
It's a very messy, uncertain world, as Lou said, so accurate. And there are many things that are affecting the markets, right? So we've already had a big crash, more than 20% correction in equity markets.
One day.
Yeah,
it touched 20% one day.
One day.
Yeah.
And then, even bond market has been, especially the US and treasuries, which is normally when things go bad and crisis happens, the dollar strengthens and US bond market does well. But actually it went the other way this time for the first time. And we know why, because of Trump, because of tariffs, because of the uncertainty, because people are losing faith in the United States and things like that. So I think it's a very unusual environment. It's a very unusual
Have you
market.
come across something similar?
Yeah. Well, not exactly like this. So we talk about how markets rhyme, but they don't exactly follow the same trajectory. So one of the most interesting things from the Fed is that, remember Governor Powell, after the recent interest rate not taking action on the interest rate, Fed rates, he actually had a press conference, and at the end of it he said, this is an environment where we've never experienced these kind of things, and therefore we should be humble. This is the Fed governor coming out in a press conference after deciding not to change rates and saying that there's so much uncertainty. Speak louder, okay. There's so much uncertainty that we should be humble. If one of the smartest people are saying that, I agree. There's so much uncertainty. Having said that, there are a few things that we should consider. One is that growth is actually not as bad as people had
Actually, the
thought.
sound is good, video is good.
Okay.
Whoever is not hearing well, just volume up, okay? Just volume up.
Yeah.
Just volume up, okay? All right, thank you.
Sounds
All right,
good.
Okay.
Yeah. But we'll speak loudly. Yeah.
Okay, Luke, can you check the
Speak
sound?
louder.
Sorry. Yeah.
Yeah. Very specific request. Benny is asking me to move forward and asking you to move back. So, okay.
The sound is okay?
Sounds okay for most people.
Yeah,
but
sound is okay.
Loud and
Whoever
clear.
is not okay, just volume up, okay?
Yeah.
I want to see 700 thumbs up. There's 1,500 of you here. Less than half of you give a thumbs up. What on earth, man? We've got special guests.
Very loud already. Great audio. Okay.
Yeah.
It's okay. So we'll keep speaking loudly.
No, I think it's okay. It's not over. I need your voice for 5 hours.
Yeah.
Okay.
Okay, sounds good. So basically, I think that, growth, especially in the US where we had the highest number of concerns, now actually is better than expected, right?
In terms of?
Inflation, growth.
Oh, okay.
And then inflation is a lot of worries, tariffs, war. There's so many concerns about inflation, but the reality is that inflation has continued to come down.
I didn't see it going up.
No, and recent CPI, consumer prices, PCE, which is what the Fed likes to see, all of the numbers came in actually slightly softer or in line. So CPI, consumer prices, inflation is actually coming down. Unemployment has been pretty much at that 4.1, 4.2% for the last 1 year. So, it's pretty stable. So unemployment's not going up. And those are some of the most important metrics that determine where interest rates should be. And interest rates, as a result, for 12 months has not moved. The Fed has kept it every quarter. At the beginning of the year, remember, there's a market consensus. So there's on Bloomberg and other indicators, you see what the market is expecting Fed rate cuts, number of Fed rate cuts throughout the year. At the beginning, we had people expecting at least 2 cuts. And then it went down to 1 cut.
Yeah.
And then when the crisis happened, they said, oh, they're gonna cut. So 100 basis points, 4 cuts was priced into the market. Now we're back to where we began at the beginning of the year, 2 cuts and maybe 1. And then in 2026, 27, we're expecting 1 cut each. So I think, it goes to show again, the market tries to predict the future and they fail miserably. If you had followed those kind of predictions, you may not have done great. As a result, interest rates have been quite volatile, right? Just like US dollar, just like markets, equity markets, it's been quite volatile. But after the initial concerns, US debt rating coming down, tariffs and wars, we're actually back to where we began.
Yeah.
Yeah. So it's actually an environment where I think we are what we call pricing in the risks. We're kind of seeing things normalize. And that's an environment where, especially where interest rates are at 4-5% kind of expected returns, it's actually not a bad time to be allocating to bonds.
Whoa. Okay, bonds later.
Yes.
Remember, I'm here today to fire $100,000 in the bonds. And then I want to tap your brains as well. I want to see 1,000 thumbs up before I fire. 1,000 thumbs up, no less than that.
There's
okay?
2 more from me.
Yeah, 1,000 thumbs up. Okay, so on this current situation right now, we see the US dollar going down. I know why, because interest rate is kind of projected to go down. And more importantly, the people are losing confidence in the US asset and things like that. So do you foresee US dollar going down much further, or it's something that is hard to predict?
I mean, it's obviously very hard to predict. No one would have predicted the dollar to do what it did, because historically we always talk about the dollar smile. So US dollar does really well when the markets are great, growth is great, money goes to the US, and therefore the US dollar strengthens. Or if we see a crisis, because people see the US treasuries as a flight to security, safety, and therefore people buy US treasuries, and therefore you have the dollar go stronger.
Dollar smile.
Yeah.
Wow.
But normal environment, emerging market currencies do well, Japanese yen does well or something else does well, and therefore the dollar doesn't strengthen as much. So those are the 2 extreme cases when US dollar does well. So the growth we saw in the recent years, when growth was good, fundamentals were great, growth was good, then the dollar was relatively stronger. But then what we've actually seen is,
everybody went in and bought US asset
US dollars
and drove the US dollar
higher.
I see.
And actually when we saw the crisis recently, just like Ukraine or COVID, people should have gone to the US dollar, but this time it was different. So it's the first time that we've seen in a very, very long time since, you know, the Great Depression maybe, or the 70s when stagflation was happening in the US, that you've actually seen a different response from the market. And that is precisely because of Trump's policies, it's because of the tariffs, it's because of the fiscal deficit, it's because of the uncertainty about the budget, ceiling, and the credit rating decline. And all of that is contributing to increasing concerns and mistrust of the US. But you were saying what's going to happen now? So we've already seen the dollar weaken against, you know, the Singapore dollar in a meaningful way. I think it's lost about 11% against the euro and other alternatives. Japanese yen, I think it's lost 8%. So, you know, I think a lot of the adjustment has already happened. A lot of the negative has already been priced in. So from here going forward, I don't see the US dollar weakening in a meaningful way. In fact, if it reverses, for example, if the tariffs go away, because as Lou said, tariffs come and go, and Trump, we don't know what he's going to do in the future. But if the tariffs are removed, if uncertainty is removed from the US, and the external environment is still one, like geopolitics with Iran is uncertain, then the 4-5% yield that you're getting from US treasuries or investment grade credit or mortgage-backed securities or other kind of opportunities in the US may actually attract back capital, and so US dollar may strengthen again. So I don't think there's a huge risk that the US depreciates a lot. That's my personal view.
Do you think that the so-called de-dollarization and then everybody completely lose faith in US asset and the dollar will crash to parity with, I don't know,
with Sing dollar?
Yeah, with Sing dollar or something. Like this kind of thing will happen. Yeah. Everybody's like crying murder. So, and the Chinese yuan will become the, that kind of thing, right? You heard that?
So there's two separate things. One is that I personally have always said the Sing dollar should strengthen against other currencies. The Singapore government and the central bank MAS will manage it, so there's no sharp movements. But over the really, really long term, Singapore dollar has appreciated against every major currency.
Everything.
Because you have such a rich nation with a lot of reserves and continue to, you know, grow assets and, you know, money and everything, becoming richer every day.
Rich foreigners coming in with lots of money.
Rich foreigners coming in. And so it's one of the most stable, neutral countries in the world. And so Sing dollar should always, I think over the long term, do well. But like tactically in the near term, I think obviously US dollar is weakened so much that, you know, maybe we won't see a meaningful move from here. So, you know, one of the things that I don't like doing is trading currencies. People like to trade currencies, but it's very difficult to make money.
He said if he is expert, say that, please don't trade currency, okay? Yep.
So I think that that's the environment we're in, that there's a lot of uncertainty. We've seen major dislocations already happen. And actually, I would actually, if I had to say, I think there's a chance that US dollar actually normalizes rather than becomes worse. Your question about de-dollarization is a more structural, long-term trend that has been happening. So the creation of the euro, the Japanese yen as an alternative, the Swiss dollar, Singapore dollar, all of these kind of alternative options. And then recently, like Bitcoin, you know, crypto, you know, there are alternatives that people, and gold, obviously, people believe that there is alternatives to the US dollar. De-dollarization as a, you know, safe haven currency is definitely something that has happened. De-dollarization from trade has happened somewhat, but I think euro and Chinese yuan have limited factors. That means that the US dollar will not be replaced as the major currency of choice for trade. And then, you know, the last one is finance, and US domination of the financial markets, I think, hasn't changed. If anything, it has strengthened even more. And that's why we have had so much talk about the US exceptionalism of US equity markets, US technology, US, you know, assets, real estate, everything. And so I think it's very difficult to see that being displaced. So
not in my lifetime, right?
You never know. Never say never. We don't know how long we'll live. So
that's true.
Not if you live for 100, then maybe that's another 50 years.
I want to live for 100 years old.
Yeah. So we don't know, but I think that we've already seen some impact of that. But whenever people talk about it a lot, and whenever people talk it up so much, then I become skeptical. And so I think this whole U.S. exceptionalism last year was peak. Everybody said U.S. exceptionalism, U.S. exceptionalism. U.S. is like there's only TINA, there is no alternative. S&P 500 is the only thing you should invest in. And then we saw the benefits of diversification, Europe outperforming, Asia outperforming, China coming back. And again, like everybody loves to just bash the US and say dollar is dead and, a de-dollarization. And I'm a little bit weary that, that it doesn't happen overnight. The loss of hegemony by the US doesn't happen overnight. The loss of US and the dollar's power doesn't disappear overnight. And so I think it will take time, and we'll see ups and downs throughout that period.
Very good. Okay. So right now, guys, there are 2,000 of you guys, 2,000 over people. There's only 800 thumbs up. I want to see 1,000 thumbs up. Then we'll talk specifically about what to fire in. Okay. Remember, I'm today with $100,000. $100,000 to fire. So I want to see. Please don't be stingy on your thumbs up, okay? Your thumbs up will help other people to have a chance to watch. So right now I want to ask you about bonds, right? Fixed income bonds and things like that. So the last time you spoke to us about 3 months ago when Trump started his big chaos, right?
Yeah.
I remember in the live stream 5,000 people were watching. Everybody was like panic mode, right? But I remember that was the first time you said bonds. I never thought of bond funds, right? And so on. So maybe you could first describe to all of us what's your view. My view, which I told everybody, is that largely speaking, when stock market equities have a lot of determinants, right? Moods, interest rate, profitability, and a lot, like 20, 50, 100 factors. But bonds, generally, one big factor is interest rate. One big factor is interest rate. And interest rate, of course, is affected by inflation and all sorts of stuff. So, and I see interest rate coming down. In fact, some of the bond funds really start going up. Because by the time, after you spoke to me, then I took my time. I was busy with Premium More and things like that. And today we got Premium More fans here as well. Then I went to go back, hey, the fund has went up. What the hell am I doing, man? So I told everybody that interest rate is coming down. I think there's a bonds opportunity there. Then I realized that there's a lot of bond funds out there. Even within PIMCO, I didn't realize like 30 to 50 funds inside. Things like that is like overwhelming. But let's take high level first. Can you share with us what's your view on the bonds outlook?
So let's start with the reason why we talked about bonds last time, right? Because we had dislocations and uncertainty and volatility, and equity markets were starting to fall, and so it was in the context of diversification. So we talked about gold, we talked about bonds and stuff like that. But when the market was down 20%, Endowus had a conference in Hong Kong. And that was when the market was down 20%. And overnight, I had this presentation all prepared. And overnight, that was the day Trump sent that, Twitter message saying, buy now.
Buy now.
And I had to put that into my slide and present it the next morning. And one of the things I did at the time was show how long-term, equity markets have continued to go up to the right and up. And I associated that with some interesting facts, like, for example, how the universe has never stopped expanding since the beginning of time. In fact, the universe expands at a faster rate than ever before, right? The quantum of money that exists out there has never stopped growing in the history of all mankind. The population of the world, of human beings, has continued to grow and has never stopped growing. So these are things that factors that drive long-term growth, and that is related to inflation, right? And inflation is a part of who we are as human beings, as a society, as finance markets and economies, and that's what drives long-term returns. And so I think I was highlighting that we have to stay invested, that, you know, when markets fall 20%, it's actually always a good time. You always say this too, Lou, that it's always a good time to revisit markets, right?
Crash buying.
Yeah, but what the uncertainty provides for us is opportunities for us to diversify. And because of two things, we said that bonds should be something that we should look at because of the volatility of the other asset classes and uncertainty. But the fact that we are actually being paid to put money into bonds because the starting yield is still quite high. So although inflation is coming down, growth is still decently strong, we're still getting paid 4 to 5%. And, you know, many mention of Pinko Income Fund and other bond funds. The yield to maturity is still 6, 7, 8%. And in private credit is 10% plus. So there's a lot of yield out there. There's a lot of yield that is
private credit is 10%.
10% plus, yeah.
Plus.
It's historically always given you double digit.
Really?
Yeah.
Can I invest in it?
High yield and private credit. If you're an accredited investor, you can invest in private credit here in Singapore.
I am.
Yeah, and yes, you are. Not everybody is, but if you are an accredited investor on the Endowus platform, you have access to private credit, private equity, multi-strategy hedge funds, which manages volatility through the cycle. Private credit, so it depends how you define risk, but so let me go back to bonds though.
Okay,
we'll come back to all these questions.
I was greedy. 10%, you know. Yeah. Okay, sorry. Let's go back to bonds.
Yeah. So I think that the starting yield is attractive enough for us to asset allocate to that, and then it comes to what Lou keeps saying: if interest rates come down, what does that give you? For those that are less familiar with fixed income and bonds. Bond prices go up when interest rates fall. So you get capital gains in bonds on top of the yield that you already have. So we have yield that is decent and good. Yield to maturities of 6, 7% in some of these bond funds that are very popular. You know, private credit giving you 10%. But especially for the investment grade bonds or treasuries, there is a capital gains factor. So if interest rates start falling, that our returns is actually going to be amplified. So you'll be able to get 6, 7, 8, 9%. And bond funds in the past have given us double-digit returns. So those are the factors that drive us to take a look at fixed income as an asset class diversifier, reducing volatility in the portfolio, but also giving you the option of upside returns when interest rates start falling down. Yeah.
So do you agree with my assessment that? Do you agree with my assessment that bonds have? Well, actually, I stole it from you. That I further elaborate. I think bonds will continue to have potentially some runway to go in terms of the upside.
Yeah. I mean, we're still early. We're only just recovering. Interest rates started going up and then recently have come down. As I said from the beginning, it's gone up and then it's come down. So we're only where we began at the beginning of the year. So if there's room for interest rates to go down, then that's an upside opportunity for fixed income or bond investors. Now, having said that, the question is, when will interest rates start going down? And I think that some countries outside the US have cut rates.
By a lot.
Yeah, and China, but in the US, we haven't seen the Fed cut. And I personally don't think that there is any hurry for the Fed to start cutting. So we may be a few months away. So everyone's talking about September. And I think that's reasonable. And one of the major reasons is people still want to wait to see what the true impact of Trump's policies and tariffs are. And we need about 3 to 4 months for that to start filtering in. So that was April when we began, and probably July, August, September, the data always with a lag, right? Always comes out with a lag. So data in August, we'll start to see data that is going to confirm how much the impact of tariffs will be. We'll have a little bit more certainty about what policy Trump will be following. Maybe he'll remove all tariffs by then, or he'll jack up the tariffs again. So we'll have a little bit more uncertainty, and also finally we'll be much more immune. I think we won't be so bothered about tariffs going up or down. We know what's happened over the last few months, and we're kind of becoming immune to the risks and noise that's out there, which means that the market will start stabilizing and give us an opportunity again.
I see. Okay, so this is where I think it's important for us to take a different look at global bond funds and US centric bond funds, because the US ones are kind of stuck because the interest rate just refuse to go down. But globally, I noticed those PIMCO funds you mentioned, I am sure there are some other global bond funds as well. They are really on the rise because all the other central banks are cutting interest rates, except Jerome Powell, right? Yeah. He's really too slow. Trump is not. Trump is not wrong to say that he's too slow. He's too slow power, right? Something like that.
I never expected Lou to talk like Trump, but
yeah, but
he's starting to talk like Trump.
It's too slow, stupid. Right? He used the word stupid on his own central banker. That's too much, right? By the way.
So the reason is because Powell has time on his hand, right? He has a good reason not to do anything. And so he's falling back on that. But he's running out of time in the sense that his term is ending next May, right? Yep. So we have 1 year, less than 1 year left.
Yep.
So the market is starting to bet on the fact that when Jerome Powell leaves, Trump will instill a much more flexible, open kind of Fed chair who will aggressively cut rates. So if nothing else, Jerome Powell leaves next year, and in May 2026, and we'll have a new Fed chair that is going to be much more aggressive in cutting interest rates. I personally don't necessarily agree, because I think Fed governors, so it would be a choice among the Fed governors. I think the Fed governors definitely understand why there's a lot of trust in the US Fed, and they want to defend the inflation fighting kind of credentials of the Fed. So they won't do anything stupid, but by next year, we'll have much more certainty about the effect of tariffs. We'll have growth slowing down, because growth is slowing. It's better than expected, but it is slowing. And inflation is going to be lower, even lower than this year, because remember, inflation is not an absolute number. It's a percentage year-on-year number. So if you have a higher base, then next year it shouldn't be increasing at the same rate of increase. And so interest rates will likely be lower, growth will be slower, unemployment may be higher, and that's an environment where I think the Fed will be much more aggressive in, or able to be more aggressive in cutting rates. So I can understand the logic behind it. Yeah.
Okay, we will start the Q&A shortly, but there's this huge question. Guys, there are 2,300 over of you. There's only 1,000 thumbs up. Can we make sure we have 1,200 thumbs up? Then I will specifically ask him which bond funds should I fire. Okay, because I already have in my mind what to fire.
Lou is a great marketer. He keeps moving the target. He said 200, 500, 1,000, 1,200.
Everybody hit subscribe. Okay, everybody hit subscribe. And I'm not so sure I'm keeping this video, so everybody must hit subscribe. Okay, anyway, that's not important. The very important.
Thank you.
Would you agree with my assessment, okay, that for sure the interest rate will cut significantly because the next guy is going to come on board soon, and Trump will not put someone that doesn't bark like a dog in front of him? Mm-hmm. Would you agree with my assessment?
Yeah, that's what I just basically said. I think I agree, but I said not a dog, lapping dog, because I think Fed governors are very principled people
not the next
They're
one.
not going to be a rollover, but at the same time, as I said, I think it would be a match of the circumstances will allow for more cuts, and Trump will put somebody who is what we call, there's hawkish and dovish, right? Hawkish are people that don't like cutting interest rates, want to raise it. Dovish people want to cut rates and help markets. And so we will have a dovish bent in the next Fed. So I think by May next year, we'll have an environment where the market will be at least expecting, pricing in, and betting that the interest rates will fall much faster than it did this year.
Very good. Okay. So now let's segue into the most important thing right now. So bond funds. Okay. First of all, can you just briefly describe for our viewers here what exactly is a bond fund? Okay, because and then of course you maybe want to differentiate between the US centric one and the global ones, right? So so if you could help us at an elementary level first.
Yeah, so bonds are just basically lending, right? So you issue a security certificate and say that, hey, I lent you this money and I'm gonna pay you an interest on a regular basis to you for lending me the money. And then at the end of the term of the bond, sometimes the bonds can be 1 year, 3 months, 5 years, or 30 years, like US government bonds are US Treasury, which is the government entity that issues the bond. And then they have 1 year bonds, 10 year, 5 year, 30 year bonds, and that's the term of the bond. And then the interest rate at which it's published. So it's a fixed rate normally. And then you would pay just the interest. And then when it matures, you give back the original principal capital of the money. So you get your money back. So $100 borrowed, 5%, 1 year interest. And then, so you get $5. And at the end of 1 year, for a 1 year bond, it matures and you get back 100. So technically you make a 5% return. So the reason why bond funds are attractive is you don't just buy a single bond like a T-bill or a Singapore government bond or a US Treasury. You actually have the opportunity to pool other people's money. So Lu, me, Sheng Shi, B, Kate, everybody can put all our money in together, and we hire a professional manager who takes opportunities to invest in different types of bonds, especially when it's mispriced. So when the US Treasury, I told you how US Treasuries started here and then went up, interest rates went up to, let's say 4%, went to 5%, and then came down to 4%. During that time, nothing changed. If you issued a bond at 5% and you held on to it, nothing would have changed. But during that time, when bond interest rates went up to 5%, it meant that the bond price has fallen from $100 to 95, let's say. So you have an opportunity to buy bonds at 95, and then when it recovers to 100, you actually sell it and you generate returns. So bond funds continue to take advantage of mispricing, dislocations in the market, short-term movements in interest rates and bond prices to take advantage and generate better returns. And so there is a yield to maturity. So if you hold on to all the bonds in the fund, then PIMCO Income Fund has a yield to maturity of 7 point something percent. If you hold all the funds, because they bought it at 90 or 95 or even 85, you hold on to it, it goes back to bond and you get your principal back plus the interest, you're generating a 7% plus yield. But the actual return may be lower or higher depending on where interest rates are when they actually sell the bond, because you might be selling it before maturity and then recycling that money into other opportunities in the bond market at different yield curves with different issuers at different risk levels. So that's why bond funds is an active tool. It's an opportunistic kind of investment that generates alpha, like additional returns on top of what is just the interest rate that is on the bond.
Wow. So in terms of bond funds, for Endowus, you guys carries the PIMCO fund, the PIMCO family of funds. Within the PIMCO, I didn't realize that PIMCO specializes in fixed income.
PIMCO is the largest global fixed income fund manager with, several $1 trillion. So they are the single largest fixed income specialist fund manager in the world. And they have a long track record, and there's a reason why PIMCO Income Fund and other kind of products are popular, because they've been able to generate superior returns for a long period of time. But there are a lot of great bond fund managers. We have a full suite of funds that are investment office. So we're not like a supermarket. We put every bond fund that's out there. We actually only choose the best funds And some people ask, why not just corporate bonds and we do funds? Because we think that we can express and gain exposure to every asset class in fixed income by investing in the best funds. And if you invest in the best funds, you'll do better than just buying a bond. So, you know, and you can't like manage like 100 different bond positions, which would be the most effective way to do it. So you outsource it, pay a very low fee. And on the Endowus platform, you know, even the fund like a PIMCO income fund, retail funds are priced at 1.45%. So it's an annual management fee of 1.45%. I was just told somebody tried to buy a PIMCO fund and the bank was trying to charge them 3% sales charge.
Yeah, some insane numbers.
It's ridiculous.
It's ridiculous.
So Endowus doesn't charge any sales charge, does not get paid by anybody. We give you access to the institutional share class, the clean share class. So that's 0.55% versus 1.45%. So the exact same fund, exact same performance, and it's almost 1% cheaper every single year. So you're paying somebody 1% every single year more for the exact same fund. So there's no reason to buy it anywhere else other than Endowus, to be honest, because we give you access to institutional share class at the lowest cost. Even adding the platform fee, we're still much cheaper than every other platform. Even the free platforms, they take the trailer fees or the commissions that are paid to them out of the 1.45%. So 0.55 plus 0.3 is 0.85. So do the maths, 1.45, 0.85 for the exact same fund.
It's no comparison. Yeah. So now, within you got me very excited the last time because you fired into the is it called the PIMCO Income GIS funds or something like that? GIS so I tell you something very funny. So when I finally got my act together, because I was so busy with all my businesses and companies, then I said, hey, I'm going to miss this opportunity, right? So I've been firing a lot into TLT. Are you familiar with TLT, which is the long-term ETF for US? Then I realized that, hey, the global bonds are going up. So in fact, I told one of my friends here, Mr. Tang, that let's not over-concentrate in US bonds. Let's try global diversified bonds. And while I was trying to fire, I didn't fire my own money. I stole B's account, and then I was playing with an Endowus app. I recall that she has got about $99,000 of SRS sitting there collecting dust for nothing. Can you imagine to accumulate 99,000 of SRS, how much years you left it untouched? That's my wife, right? So I decided I'm going to steal her money. I'm going to throw it inside. So the day I fired into the PIMCO Income Fund, I fired 99,000. Then 2 days later, I got rejected. No, actually that day when I fired, then I showed everybody, I fired, I was quite happy. Then someone said, hey, Mr. Lu, you didn't fire into the PIMCO Income GIS Fund, you fired into the Capital Security Fund. I was like, gosh, it's a different fund, that's why I'm in trouble, you know? And then my wife, when heard that, what did you do with my money? Can you imagine that night was quite tense, right? So I was like, oh gosh, I'm dead, right? It's like, and I didn't know what I fired into. Okay, you know what? Then of course I asked my super fund manager, which is my son. He's quite good, right?
Yes.
Yeah, he's quite good. Ben is damn good, man. So I said, go and do a research. And he and his colleague
at
Endowus, both of them jointly try to figure out what the hell did I invest in. Yeah. Then it turned out that the PIMCO Capital Security Fund is actually a very good fund as well.
Yep.
So right now I'm dilemma. Now the funny thing is,
it's Ben and Brandon. Yeah, Ben and
Brandon, B&B, right? The funny thing is that sale didn't go through because I didn't know that my wife had $97,000 in the SRS, not 99. So Endowus rejected the one. So now I've got another chance, right? Now I've got another chance. Luckily, the whole market still was flat, right? Now I've got another chance, right? So the PIMCO Income Fund, which now we've done a lot of research in it, versus the Capital Security one, okay? So to me, one depletes the NAV over time. They give you a high, they probably make about 4%, and then they give you 6%, and so it's like a CPF Life kind of thing, right? It's kind of like tapering down, but this one doesn't. This one doesn't taper down, but this one has more volatility. So things like maybe at a high level, how do we choose a bond fund? I don't even know how to choose it. I've been an equities guy, I've been a CPF guy. When it comes to bond funds, I'm completely idiot. And when they asked, 1965 community expert asked me, I said, I'm going to get Sam here. So actually, this is the main question. I want to see 1,200 thumbs up before I fire anything and decide anything. Okay, sorry. How do you choose?
So is it 100,000 or 97,000?
97.
Okay.
I will deploy 3 more from my side.
Okay. So 2 lies. One is 97,000, not 100,000. And we know that B is too nice to give him crap. So, so that was also a lie.
Okay.
It was a joke.
Okay. But, how do you choose a bond fund? How do you decide on what bond funds?
Okay. So, so capital security. This is a good example. So, what is the difference between capital securities and PIMCO income fund? Is what I'll start, because both of them actually give you similar yield to maturity, 7% plus. Distribution. If you like distribution, you like income, you can actually buy, and then you can actually get paid out a regular sum, and so that's called income distribution. And all bond funds have, not all bond funds, but a lot of bond funds have distribution share class, so they pay out, like Lou said earlier.
So they got kind of retirement income kind of thing,
if you need retirement income or regular income or regular spending, then you can use the income from the bond fund to sustain or supplement your income. But the other option is to accumulation. So any kind of dividend or interest payment that comes out of your fund will be directly invested. You can do it yourself, but the bond fund manager will automatically take any money that is coming out directly back into the investments available for the fund and make it more efficient, low cost. And so it will compound returns over the longer term. So you have both options for a lot of the bond funds, and it's just personal choice. A lot of people like income. They like the fact that every month there's a certain, few hundred, few thousand, whatever amount you have come into your account. It's nice to see. But the problem is, do you actually need the money? If you don't need the money, then you don't need the distribution.
So, so the difference is distribution versus accumulation. I see. Okay. So that's the first difference.
Yeah.
Okay. So we have to first decide whether do you want distribution, which is income, or you want kind of a compounding.
Yes.
Okay. All right. So that's the first dimension.
And then within bonds, equities, I think it's more. You differentiate by, I guess, country, by sector, by size, by certain characteristics that we call factors, like is it value or growth. So bonds, the way you divide is not only by country, whether it's US bonds or European bonds, and the country is important because that's driven by the country's interest rate. So there's a base interest rate. Japan is always going to be lower interest rate than Europe, which is going to be lower than the US, for example, right? So these, which is going to be lower than emerging markets, and emerging markets is going to be lower than frontier markets, for example. So interest rates is one major factor that we should look at, but the other one is that where does it lie in the credit kind of spectrum? Credit spectrum means how risky it is. And what is the risk that we're talking about when it comes to credit risk is just like banks lending to people, you assess, has the person who is taking the money the ability to pay me back my principal and I won't lose my money. And so the most safest investments are government bond funds. Among all the governments, the safest will be not only Singapore government, but US government and other major developed market governments with a lot of trust built in, right? So government is the safest, and then really large corporations like Apple or multinational conglomerates, these companies will be the high quality investment grade kind of credit. And then you have semi-government like mortgage-backed securities, Fannie Mae, you have state governments and others. And then you move up and you have like high yield. So these are low quality kind of bonds, and lower quality companies or smaller companies, and therefore you have to pay more in interest. And then on top of it, you have private credit and other opportunities that will generate even higher yield. And then the final thing is interest rates. Is it fixed interest rates? And therefore, when the interest rate changes, the market changes, then do you have capital gains or capital losses when interest rates rise? So that's a normal bond. But there are floating rate notes. So floating rate bonds are like bank interest rates. So when interest rates go up, they follow, maybe with a lag, but they will reprice. Private credit is a floating rate, and therefore you have very high interest rates, but you don't benefit from falling interest rates. You actually have returns decline because prices go down at times. So that's another factor, whether it's a fixed rate or a floating rate note. And so you put that all together and say, where in the risk spectrum do you want to invest in? Do you want higher yield and I'm willing to take higher risk? Or I want safety and therefore I want to have government bonds only. If you want interest rate risk, like interest rates falling, I want to have duration. So long-term bonds maximize the upside when interest rates are falling, and therefore when interest rates are falling, you want to be long duration. You want to have long dated, long duration bonds because they maximize the returns. When interest rates are rising, you want to reduce the risk of interest rate risk, and therefore you go very short duration, or you go into cash or fixed deposits, because then you have high interest rates, it reprices, but you don't lose capital during that period. And then the final factor I think somebody put on, Sing dollar hedged. Unlike equities, which is very inefficient in using FX hedging, fixed income is easier because we know how long the fixed income maturity is, and normally it's not every day that you buy and sell. So you actually can do a much better job of hedging the currency and have Sing dollar share classes. Almost every bond fund, especially retail bond funds on the Endowus platform, we prefer to have Sing dollar hedged portfolios. We also have US dollar and other currencies and non-hedged if you want it. And in the previous environment, when Sing dollar was weakening, maybe that would have been good. But in this environment where Sing dollar is strong and strengthening, having Sing dollar hedging has been an amazingly good thing to do.
Okay, so right now, back to my question. So we have got, there could be, so right now I'm just between the two, not because these are the two best, because I don't know the others. So this one, I remember you said the PIMCO Income Fund. It's called a GIS, I think.
GIS is a share class that is sold in Singapore.
I see.
To the retail market. Yeah.
Okay. So this one, what I like is that it's a steady stream of income that comes in. But I've asked myself, I don't really need a steady stream of income right now. Or rather, she doesn't need a steady stream.
You don't need, but maybe B needs.
Yeah, I was about to say that. Maybe, maybe she don't need a steady stream of income right now. She will in time to come.
Yeah.
The second one is that, there is this element of NAV reducing, because it does take out from, and a lot of people are very concerned about this NAV, reducing NAV. Yeah. Is this something, we need to be concerned about?
So we always talk about, and please, reach out to support@endowus.com or talk to our client advisors if you have any questions like this, and we can make it very clear, especially on the, you can go into your app and, choose the bond funds. I think somebody was asking earlier how to choose, but you choose FundSmart, not the portfolios, although we have good fixed income diversified portfolios. But you can actually go in and make a choice among all the funds in the FundSmart portfolio. FundSmart. Choose your selection, and then you have like a list of all the funds that are available. And this is a curated list of.
Oh, that's how you get it.
70.
I don't know how
78 funds, but the actual number is less. Because we don't like to offer like 1,000 funds, because most people don't know how to choose. So, the securities fund is like, we have the Algebris Financial Credit Fund, we have the Invesco Senior Loan Fund, but the PIMCO Capital Securities is very much like the Algebris Financial Credit, because it invests in financial companies' balance sheet, debentures, capital structures that can generate good returns for you. And then the PIMCO Income Fund invests primarily in asset-backed and mortgage-backed securities. So it's a different asset class. So you can say that big banks are safer, or municipal bonds, or mortgage-backed asset-backed securities is safer. You can debate. The way is what interest rates you can generate, and actually it's not that different. It's like 7% plus. yield to maturity, payout of about 6% plus. And it is true that certain funds pay out of their capital, so you're depreciating. But this is especially true for distributing share class funds, especially income funds that are sold. Oftentimes take money out of your money instead of money from interest rates, right? So you should try to like buy bond funds if you have income, you want income, to be not paying out from your capital, but paying out from just interest rates. But the reason these guys do that is because people want the certainty of income rather than the certainty of returns. And so, you know, it's what you want. What do you prefer? Do you want to grow your capital or do you want the regular income? Secondly, if you are paying out of capital, you know, interest rates, we have some great questions. So interest rates, when they're low, right, obviously it's difficult to pay out income. And so normally the capital drawn out from the fund is higher when interest rates are lower. But because interest rates are high and these PIMCO income funds, you know, yield to maturity is 7% plus, it doesn't actually take from as much capital because the income generated from interest rates is actually high enough often to pay out the payout. So 6% payout from just interest is possible if you have the right portfolio.
I see.
But you should always do your due diligence. You should always ask your advisor if you need advice so that you know exactly what you're investing in. You need to understand whether you need income or not. Like you and B need to decide whether you want income or not. It's not sometimes needed, but sometimes wanted. And sometimes, you know, it's actually not needed or wanted. Yeah.
So, okay, so myself and where's B?
Yeah.
Say hi. So we are, if we just want a bond fund to diversify away from our equities, you know, we always have this science that says it will be 60-40, 50-50, 70-30, whatever the ratio is. Right now we're like 90-10.
Yeah, more than 90-10, I think.
90-10, right?
95-95.
So B is I think 90-10 right now. I'm a little bit higher. So we need to level up, right? It's not that we need the income. My wife would love to have some income to buy some wonderful
gifts for her husband.
No way, man. Yeah, she's gonna
say hi, B. Come say hi.
She's gonna visit Taka Jewelry this Sunday. She's gonna lift up the economy there, man. Okay. Anyway, but my question really is, if I want something to kind of like not for income sake, but to kind of balance off the equities and bonds ratio, right? I thought that the capital, the PIMCO capital fund bond funds might serve that role better. Do you agree with me?
So
or something else?
It depends on what you're comfortable with, what your purpose for investing is. So investing, as we always say, is a very personal experience, right? Some people are able to take a lot of risk and therefore have 100% equities all the time, and they're fine with it. Some people want lower volatility. And therefore they want to diversify into other asset classes like bonds or gold or, you know, private markets as well, or hedge funds. And all of that is fine. So I think it's starting from yourself, how much money you have, what is the risk appetite you have, and then your understanding and sophistication level obviously helps as well. So I think working with Endowus, you can get trusted advice to help guide you along that journey. And this is kind of what we do with Lou and B as well. And Ben, you know, their son is an amazing, he's going to become a guru himself. And
the first job I'm going to ask you to do is ask a job from you.
Yeah. Always welcome, always welcome. He's good enough for Endowus for sure. But the point is that people like Ben in the last few years have grown tremendously by learning, reading books, you know, becoming more sophisticated, and people change. And so if you know more, then maybe sometimes you're able to take bigger risks. So the reason I'm explaining all of that is because there is no one simple answer for everybody. So there are guys that would prefer to buy index funds, people buy, you know, single bonds. But for most investors, I'm just saying for the vast majority of investors, I think you should be investing not in single securities, but in bond funds. And within the bond fund universe, you have enough choice, targeting whichever risk level that you want to go after, what kind of return yields that you want to go after, how much payout in terms of income you want to go after. And so you start from your needs and your goals, and then you work backwards and say, this is what I want, what is suitable for me, and what is the right fund or portfolio. Like Endowus has the flagship fixed income portfolios. We have the income portfolios. We have 3 different income portfolios. I work to create with Yulin and colleagues at Endowus, and now they're upgrading the portfolios even more into stable income. So it targets 4-5%. You have higher income for those that want to take a little bit more risk. We even mix multi-asset, so you can have 20% equity, 80% bonds, or 40% equity and 60% bond to juice up the returns a little bit from equities and still generate good income by investing in high yield income and generate 5-6% payouts. So there's multiple choices. We have pre-built portfolios for you so that you can one click and buy a diversified bond, global bond portfolio, or you can have income portfolios targeting a certain yield payout, or you can buy single funds. Like today, Lou focused primarily on single funds, but you don't have to just do single funds. You can buy portfolios that are built by Endowus, or you can buy single funds like PIMCO Income and all the others that we were talking about.
Okay, so this is where we hit 1,200 as I promised you guys. We're gonna do Q&A right now. And at the end of it, when I hit 1,500 thumbs up, okay, I'm gonna fire in front of you guys. Okay, first of all, I need to declare, I do not get a single cent of referral fee from Sam, but he did buy me a char siu fund, and it's really very good. That was very good, right? Yeah, the char siu fund, very good.
Very good today.
So cannot say I never get anything from him. I do, one char siu fund, okay? So you have asked like 50,000 questions. We're gonna do quick fire, quick answer Q&A, okay? I'm gonna ask a question, and then Sam, you're gonna answer, okay? If you don't mind, my questions are here, so my eyes will be down here, okay?
Okay.
So what's the minimum amount to invest in bonds? In Endowus?
$1,000.
1,000?
To buy institutional share class PIMCO funds and portfolios, $1,000. Right, Shingxi? Yeah.
Why do I have to invest 100,000 for the other one, the EA?
Because you generate higher returns.
Well, that's okay. Anyway, okay. So
how to buy bond funds in Endowus? You download the app and you reach out to our client advisors or download the app and start onboarding. SingPass, you create an account in 2 minutes.
So
yes, can use SRS, CPF. We're the only platform where you can do CPF, OA, SRS, cash, personal savings, private wealth.
And between PIMCO and Amundi and some other guys, which one should we choose?
So
there's too many.
Amundi is passive, low cost.
Yeah.
PIMCO is higher cost but higher return, let's say.
So which one is better?
Simply put, it depends what you want.
Okay.
If you want passive, low cost, you can buy Amundi. If you want, active and you want maybe higher payout than income. If you want, exposure to, private credit and generate 10% plus, you reach out to Endowus Private Wealth and be an accredited investor, verified, and start investing in Endowus Private Credit and stuff like that. So there's multiple choices that's available on the platform for different types of users, different amounts of investments as well. Shengxi.
Mr. Tang, Mr. Tang says that try 1 year but not successful lock-in. Mr. Tang, you look for me, I'll get someone to look for you, okay? So don't worry, Mr. Tang is a good friend of mine.
So one of the things that I do want to highlight is that some people have talked about performance, and bonds and fixed income have generally not done great in the past few years. We had 30 years of interest rates coming down from 1970s to 2000s. So we had a long-term bond rally that kept doing well for us, and so people assumed that was the norm, but it's not the norm. And then it crashed, and then so we've had Asian credit, China credit blow up. We've had US even not doing that great, and so bond returns have been subpar for a few years. But bond funds like PIMCO Income Fund, I think only had 1 negative year or 2 negative years. Whereas fixed income benchmark was down for 3 consecutive years, negative returns. And especially that's interesting because that's during a time when equity markets did really, really well. So if you had been underweight equities, it would have hurt you. But we're entering a period where interest rates have actually gone back up, back to 25 years ago. And therefore, we are at a point where we are being rewarded for holding some bonds for the yield. And then if interest rates fall, whether it's this year or next year, we're going to have some capital gains on top of that that will generate good returns. But the most important thing about bonds is not just the returns. It's the fact that in April, when equity markets was down 20%, bond funds were down only single digits. And so it is negative as well, but it fell much, much less than riskier assets. So it's less risky, less volatile, loses less money, even though it does lose money at times. So you wouldn't have lost like a 20% return on bonds unless you bought a single bond.
Okay,
and that's why bond funds are better than single bonds.
So the question is, does bond fund has maturity period?
Bond funds are not, yeah. So open-ended mutual fund or unit trust structures. So they're able to buy and sell bonds continuously and generate returns consistently.
Okay.
Yeah.
And now maybe talk about someone asked about this PIMCO GIS diversified bonds. There's one more, right?
Diversified income. I think there's a diversified income product.
Yep.
But there's a lot of bond funds. As you can imagine, they manage trillions of dollars, and so they must have a lot of different funds, right? And so there's a PIMCO Emerging Market Bond Fund. There's diversified income. There's capital securities. There's low duration, and that's what I was talking about. The different types of credit risk, from government bond to municipals to asset-backed to investment grade to high yield and emerging markets and private credit. And then on the other side is short duration, low duration, core, globally diversified, multiple different geographies, China bond funds, Asian bond funds, Asian credit, Singapore government bonds. There's so much choice, but it really depends on, I think what's the most important thing is target what yield you want, what interest rates, and do you want to be paid out or not? And then you can work towards finding a portfolio that is suitable for you.
Okay.
At the risk level that you want to take.
Okay, many of our users are my age. And even Mr. Lu didn't know how to pick the bond funds properly, and I ended up buying the wrong one. I was lucky because the money wasn't enough, so they rejected the deal. So now there are a lot of questions regarding how to use the app. I must admit that even I didn't it didn't work out for me. In the past, I had the privilege of people to actually execute the fund execute purchase for me. So now I'm trying to self-service, and I failed terribly in my first attempt. So what? And I'm not the only one, right? So who can they reach out to? And is there some? I got big time investors. They are mega AIs asking this question right now. I can see their names. Yeah. What do we do? So you don't have a shop, right?
No, of course you have. So we always say support@endowus.com. You can email in, and our client advisors will respond. But the app is actually very easy to use.
That's not true.
You can't read.
I got a mistake.
You can't read. Income, PIMCO income,
PIMCO
capital securities. So look for the right name, PIMCO income, not PIMCO capital securities.
B.
Okay.
You're the best litmus test, right? That's my wife there over there. Okay.
I trust B more than Lu.
You log in right now and see where you can look for. Don't press invest.
Fund.
PIMCO. No. You should. Okay. You look for the PIMCO income fund,
GIS
and then
income.
look for the PIMCO capital. What capital? What?
Securities.
Capital securities. You see where you can find it. Okay. We're gonna get my wife to do a test right now.
There's a divide between Mr. Lu, which is easy to use.
Jian-Ming, you're smart and young. That's different, okay?
Yeah, my wife and I. How do you know the age? How do you know her age?
I know Jian-Ming.
We have 80-year-olds who are using the platform.
Those are smart 80-year-olds. This is stupid 50. Yeah. My wife is here right now.
Yeah.
Okay. You found it.
She found.
Oh goodness.
She can't log in.
You can't even log in. Oh no, my password is here.
Yeah. It's okay. I mean, everybody is different. Everybody's different.
What's the password?
Yeah.
Goodness, my password is on this phone. There's live streaming. You ask.
Yeah.
Okay. Anyway. Yeah.
No, I think I understand. I think for some people it's easier. Some people it's harder.
They use your face recognition.
And that's why I think, you know, whenever you need help, you can reach out. That's why we have human beings.
See, Ivan has the same problem. My wife didn't find a fund she wanted to. But anyway.
So there's a few things. So there's a search function, so you can actually type the name and try to look for it. Or you can choose filtering. So filter through the different categories, choose the fixed income funds. There's equities, fixed income, multi-asset, and different categories. But you can choose the fund manager. You can tick PIMCO, for example, to look for PIMCO funds, Allianz Global for Allianz Global funds, and Aberdeen and Schroders. You can choose the fund manager. That will narrow the list so that it's easier to find. But again, you don't have to buy single funds. You can buy a portfolio of stuff as well. So, you know, global diversified portfolios have done really well as well. So, and the portfolios include PIMCO Income Fund or PIMCO Global Bond Funds as well. For those of you who find it difficult to choose, then we do give you help in building portfolios or advising you in the process as well. But one of the things I would like to recommend is for you to just try it out and, you know, learn how to use it. Give us feedback. We'll try to improve it. We have spent a lot of money trying to make it as easy as possible for the type of investments that you need to make.
If I set up a counter, first of all, I get myself trained. I set a counter, charge $20 to help you use to find a fund. Will you pay me?
Don't need to pay $20. You can go to Endowus, support at endowus.com, or
so
you can even WhatsApp or, you know, phone calls.
So support at endowus.com
is the best way.
Yeah. Okay. So Mr. Tang, you reach out to me, because he's So
somebody was saying 240,000 shot. What is that?
Okay, if I fire 240,000 cash in one shot or DCA when it comes to bond fund, actually this is a good question. Equities, you always concept of DCA, right? What about bonds? Is there a concept of DCA?
Yeah, so I don't think it's the same. Equities, there is a concept because, you know, over the really long term, you know, what did the phrase that they use?
DCA.
No, the other one. One shot or
one shot.
Yeah. So
lump sum.
In the long run, always wins, whether it's equities or it doesn't matter.
Okay.
But DCA we use because, one, we have regular income. So we spread it out because we have regular income that is invested. So I may have saved $100,000, but my income over the next 10 years is going to be more than $100,000, right, invested. So the equity markets keep rising. You're going to put money in every time the equity rises higher than where it is now, normally. And even if markets fall and recover, it's always going to be invested at a higher level. So lump sum always wins over the longer term, right? But DCA does two things. One, it gives us discipline to invest on a regular basis, no matter what the market does, right? The second thing is gives us peace of mind, because we're worried that if we do a lump sum and markets fall, we'll lose money. So we put in some money and then we do the rest in DCA type of stuff. Equity markets, that's how you can do it. But in fixed income, there is no concept, because if fixed income, especially at these higher interest rates of 4-5% or 6-7%, you know, there's no reason to do DCA, because the capital gain, whatever that capital gain is going to be overcome with the 5% type yield that you'll be getting. So especially for bond funds, I really don't think it's important or necessary for you to do DCA unless you have, you know, you're regularly saving every month from your income, and that's the only reason you're doing DCA. So lump sum in bond fund makes sense, because then you can get more interest and get more distribution as well. So
is money market fund better than bond funds?
No, money market funds are like cash deposit, fixed deposit like. But fixed deposits are locked in, whether it's 1 month, 3 months, 6 months, 1 year, tenure. But money market funds have daily liquidity. But because it's investing in government securities or short-term cash kind of products, CDs, certificate of deposits, and sometimes even institutional fixed deposits, especially Fullerton Cash Fund and these kind of cash funds invest in deposits. It's actually giving you daily liquidity. So you don't have to lock up your money. And money market funds, as a result, is very popular in developed markets for both institutional investors and also individual investors. And therefore money market funds are available on the Endowus platform. They can give you 3 point something percent, 4 point something percent yield, and no lockup, no penalty for taking your money out at any time, and you know, daily liquidity. Yeah.
Okay, so they can reach out to support@endowus.com for two problems. Number one is that how to use the app,
Yep.
and number two is which fund to invest in, right?
Yeah.
Okay.
And you have SGD hedge funds for all of PIMCO's range. Yeah.
Okay, so this is a good question. I keep your questions flowing. I will may not answer all. Have you mentioned locked in?
Yeah. Bond fund lump sum makes sense because
Oh, you locked in. Oh, you
and
found
she
it.
found it.
Wow,
See?
my wife. Wow, she found it. Wow, you're so good, are you?
Yeah.
Come. You tell me. Tell that experience. Come.
You need to
So
know.
be easy or not?
It's provided you know what fund that you're going for. Then you can search. There's actually some place for you to search.
There's actually a search function. Yeah.
Yeah, there's a search
Oh,
function.
you found it.
Yeah.
Wow.
Yes.
Okay, give another challenge. The other fund I'm interested in is called a PIMCO Capital Security. Is it?
Yeah. You search.
PIMCO Capital Security. Show me how you do it. Okay, later I'll show
The
you.
exact name?
PIMCO Capital Security. Shit, it's the first one.
Yeah.
It's the first one. How do you get to here, man?
Just click
Wait, guys. Okay. Wait, how do you even get to here? Okay.
Fund Smart.
So we are now in the cover page, okay?
So wait, just to say, like cover
Yeah.
page, there's build. So these are portfolios. This is do it yourself. So it says build it yourself. Once you click on it, this big box is Fund Smart. Fund Smart is the lowest cost fund platform. So you click on Fund Smart and then it starts giving you the source of funds. So you have SGD, CPF, SRS, and US dollar, I think, as options initially. You can choose other currencies, and then you choose SRS, right, which is the second option, which is B. And then you have a list. So you have equities first, you have fixed income next, multi-asset, but you can actually just search here in the search and type in capital securities or whatever you want to do. The other thing you can do is actually filter and choose PIMCO.
They can't see.
And okay, see. Anyway, so there's multiple options, but the best way is just search with a name.
Wait,
Yeah.
I see whether
Search
Uncle Me knows how to do it, okay? So I look for capital security. Search.
No, you mistyped it.
I mistyped it.
When you type, it's already here at the top.
Oh, I know how to use now. All right, I know how to use right now.
So B taught Lou how to use Endowus app to the shareholder and long-term investor.
See, babe, hi, say. Well, very embarrassing, man. Okay,
Nothing to be embarrassed about. We're getting
1,500 thumbs up. I fire the first lot. 1,500.
old. Number keeps going up.
Yeah. I fire the first. I'm going to separate the two. Okay, I'm going to separate two. 1,500. I do it in front of you. Okay, yes. Now Mr. Lu is smart. I'm not too sure I'm smart. It's super guided. Okay, I'm very paiseh that my wife, who is investment, can I call it investment bimbo? She's an investment bimbo, and I didn't paiseh. My wife, investment bimbo, can find it. Why is it?
Impressed.
How you managed to find it? That day, how the hell did I?
You married a smart woman, Lou.
Can I just press explore here?
Yeah. You can do that here, or you can do it here. Yeah.
Okay, I'm going to try it.
That's not. Is that? No, this is explore.
Oh, this is explore.
So
Okay,
you go into Fund Smart first.
sorry.
Oh.
Okay, it's actually not that difficult. So Mr. Lu is ultra stupid. Okay, guys, I know what to do. Okay. So what you do is that you just hit explore here, and it goes to search, right? Once you go to search, okay, you just go to.
Build it yourself.
Well, I don't even need to build yourself. I just.
Yeah.
Can I just go
Yeah, you can
straight
do
here?
that, yeah.
There's a search bar on top. You just type down. In the case,
Is here,
It's
Pinko
even
is there.
Pinko's even
Pinko is
there.
there.
oh well.
You found that first.
Yeah, I found that.
My
This
wife.
is popular words. Popular
Then
words.
I just look for the word PIMCO. I hit PIMCO, okay. And this
Fund
is
Smart. Yeah. Funds.
oh, build it yourself.
Yeah,
Okay, then you
funds.
say build it yourself.
Funds.
Okay. And then I use SRS.
Because we have different funds for different funding sources. So CPF funds are different. SRS funds may be different. So you have to choose-
1,500 thumbs up. I fire my first shot in front of you guys. Okay. I wait. Okay, we have one time. We do Q&A first, okay?
Okay, more Q&A.
Okay, which is a better PIMCO GIS? The one with NAV $8.31 or $9.49? I don't know why it's that. Yeah, Jamie.
So I think it's the difference between distribution and accumulation. So you should decide whether you want to be paid out or you want to accumulate and compound. I waited for 2 hours before.
Okay, sorry. I believe Mr. Lu buy the PIMCO GIS Capital Security Fund.
Yes.
That was what I bought by mistake. But today I might be different. This is a good question. I told you there's a lot of Malaysian, right? I told you a lot.
I was just up in KL. So hi to everybody in Malaysia.
During dinner time, I asked this question for you guys, okay?
Yeah.
So when is your...
So can I first say that there's a lot of scams out there. If you see anything that's not on the Endowus website or Endowus app that is in Singapore, we do not have a business in Malaysia. We do not have a business outside of Singapore. So if you see a scam on Telegram or WhatsApp, please help by saying that this is a scam, using my name, using Endowus's name. People use like so many different people now, but please help us in fighting scams out there. Because it really hurts individuals and families.
A lot of people got scammed. A lot of people got scammed. Yeah.
I think my friends, shout out to my friends who are doing a documentary about Scam City. Maybe if you're interested, let us know. But yeah, Malaysia, we are not in Malaysia. Maybe one day we'll be able to enter the market.
I see.
Yeah.
Okay. Well. Yeah, well, when they are ready, I'll let you guys know, okay? So, Sam, which PIMCO are you recommending? Which fund?
So, I own exposure to some fixed income. So, I'm not one of those guys that have zero fixed income. I do also like private credit. So, it's not available to everybody. You have to be an accredited investor. It's not something that Endowus decides is a regulatory thing, so accredited investors only, although we would love to see more broader investor base investing in it, and maybe one day we can take it into CPF, and we need the MAS who's actually doing a consultation with us and many participants in the industry about providing access to private markets, private equity, private credit to retail investors. So I think that Singapore could lead the way in this. I do believe that diversification is important, and so I do have fixed income portfolios, the Endowus flagship portfolios. I do own a PIMCO income fund. I do own, some other exposures as well. So it's diversified is the way I would put it.
So I'm not seeing the thumbs up. There are 2,564 you're watching, only 1,300 thumbs up. Cannot be guys, okay? We're
not good enough. That's why.
Even those that are watching on TV, you can do it on your phone, okay? I see 1,500. I fire my first shot. I'm separated to 50 and 47. Let's not get the wrong number this time. 50 and 47, okay? So so Malaysian just wait, okay? Malaysian just wait. Mr. Lu, is Endowus better or your good friend Christopher company? No, let me say this, okay? This is a very good question. Endowus is minimum, your minimum is how much? 1,000, right? $1,000, okay? Chris company is an incredible company, but they serve very high-end customers, okay? So please, yeah, you say you want to discuss dimension. I'm going to invite the dimensional fund research expert called Dr. Wei. Do you know Dr. Wei?
Yeah, Wei.
Dr. Wei, right?
Yeah.
So she's coming to my channel.
She's great.
Okay.
We should have more people, more experts other than me and.
But you and Chris and Chin-Heng are the best. There's nobody like you guys. Okay. So far I know. Yeah, you guys are really the best and good friend, right? Okay. Yeah. Yes, there is a link for sign up. Have you pinned up the link? Can you? Is there?
It's on YouTube.
It's on the description.
Below us.
So
below here.
Refresh the page
refresh your page. It's in the description. Okay. Yeah.
Although I do like to say that Endowus Private Wealth does serve high-end customers, but there's so many wealth managers, so many great wealth advisors and financial advisors. So it really depends on what kind of service you want, and what you want to invest in. So, and also whether you want to invest your CPF or your SRS, that kind of stuff. So
okay, so the question, right? Okay, see, I told you, right? Once I say I'm firing, the number of thumbs up goes up. Okay, so for those people who just came in, remember, hit subscribe. Okay, hit subscribe, because you can see we're lined up a lot of special speakers, and of course starting the first one is Sam, but tonight really is on me trying to catch the opportunity, what I think. Now, so for some of you, the minute you buy, you expect tomorrow, the day after, 1 week later, the funds to start making money. Let me say again, okay, for disclaimer sake, okay, follow Mr. Lu and you'll lose money. I better say that. Once I say that, then I'm free, okay? So follow Mr. Lu and you lose money. I better say that, because I get this quite often. People follow me and they lose, and they lose money and they scream. So I restate my disclaimer, okay? Follow me and you lose money. So whatever happens to you, okay? So yeah, but let me quickly say again that for those people who are struggling to know how to use the app, actually the app is quite easy. It's just that you and I not so good for it. Okay, how do I know the authenticity of this app? Are we using a correct one? That's a good question. Remember, we have a what they are asking. How do they know whether if you are use the Singapore App Store?
Yeah,
should be the right one, right?
There's only one in Endowus on the App Store. Yeah.
Okay.
I did hear from somebody that Malaysia has a false Endowus app on their App Store, and I don't know if that's true and what that means. So please reach out if you see something that's suspicious or looks like a scam. I think you can download and you can see, and you saw some of the screens. Please reach out to support@endowus.com if you have any questions. Whether it's Malaysians or otherwise, it doesn't matter. I think we're a Singapore-based company. We have a Singapore license, and we service people in Singapore, whatever nationality. It doesn't matter whether you're Malaysian or Singaporean. You can get your service in Singapore, right? So.
By the way, do you realize that your accent is becoming more and more Singaporean?
Am I?
Yeah.
People do say I sound Singaporean.
You sound Singaporean.
I go to America, people say, you're Singaporean, huh?
The first day I knew you, and now you're completely Singaporeanized. Yeah. You lost quite a lot of your accent already.
I don't know if I had an accent.
You got contaminated by us.
Please report those fake apps if there are any. And please report any scams, because it's terrible.
Okay,
upsets me very much.
There are two very good questions. Yeah. Number one is REITs versus bond funds. Okay, a lot of people, Singaporeans especially, love REITs, and I told everybody REITs is a bad deal, but I think they probably have to hear from you. Do you share my opinion? REITs is not that good a deal. Maybe let's not call it bad deal. That's not good a deal.
Yeah. No, somebody was saying that please show the app logo, and this is what the app logo looks like, Endowus logo, and that's this is an iPhone, so please make sure that it is the right app, and it's not looking weird. And REITs, I think there was a few questions on REITs, and
REITs.
We can agree that it is the worst of both worlds.
The worst of both worlds. Now listen, okay?
Okay.
Whoever say that REITs is a good deal can't compare to the CEO of Morgan Stanley investment, okay? Yeah. But let's hear what he says, okay?
Yeah. The reason I say worst of both worlds is because if you want real estate exposure, it's much better to buy physical real estate, because physical real estate has low volatility, long-term appreciation, it puts a roof over our home, many other benefits, physical real assets that it has. And then an investment trust or a fund that is listed on the stock exchange has characteristics of the stock exchange because it's listed. Because liquidity or markets or macro environments or interest rates or other factors will affect it, it doesn't move like a real asset. It doesn't move like real estate, and it's oftentimes correlated. Correlated means it moved together with equity markets. And therefore, it's the worst of both worlds, because it doesn't do as well as companies that are generating income or earnings and compounding. REITs pays out everything and doesn't really grow, because equities is a growth asset class. So you invest in equities because of the growth of the companies. REITs don't necessarily always grow.
They can't grow.
Some of them do, some use leverage, but generally they're not a growth asset class.
By law, they're supposed to give out majority of
and
their
they give
profits.
out everything, so they don't multiply. So you either go for physical real estate or buy equities, or buy, if you want yield, because a lot of people buy REITs because of the yield. The yield, it fluctuates depending on the price, which is affected by markets. And so if you want yield and certainty of yield, which is important for people who want income, then you go for fixed income or private credit, or whatever gives you better yield and more certain yield. Because especially when you're investing in investing for income, which many people in Singapore do for REITs, you want certainty of income, right? You want regular income, not 1,000 a month, and then next month is $400, and then the next month is 1,200, and then it goes back to $100. So having regular steady income is important.
Okay,
and that's why REITs is the worst of all three worlds.
So this is not I say. Okay, so for those people who, this actually, I'm gonna cut this video up in the YouTube shorts and post it because I get this question 50 times a day. Okay, which is a good bond fund for Endowus AI?
Accredited investors.
I assume that's easy.
So accredited investors, I'm not allowed to talk about. So please reach out to
Endowus
really? Private Wealth and Endowus, supported Endowus.com. So I can talk about asset classes like private credit and say there are options there for you. There's other funds that are available because you're accredited investors, especially funds that are not locally registered here in Singapore. Although we'd love to bring more in, and we're working with fund managers to bring great products to Singapore. We launched a lot of new funds into Singapore that didn't exist before. I think there was a question about ETFs and how Endowus doesn't use ETFs, and we've actually introduced the lowest cost index fund like Amundi passive index funds, which are cheaper than any ETFs listed or available, cheaper than any fund that ever existed. So we're making efforts to improve the investment options that are available, and ETFs are not necessarily always the cheapest or the best, because there's a lot of bad active ETFs. There's more ETFs than number of stocks in the world. That's how many ETFs are, and there's too many to choose from, and oftentimes they're not suitable for you. So you have to invest in the right thing.
Okay, I'm gonna do my firing right now. 1,500. I press fire. So right now, Sam, I'm gonna come to a decision. I thought of this for 1 month.
You did?
More than that, 2 months. Ever since you said. So I can't come to a landing whether I should take the income fund or the capital security one. But one thing out today is, for sure I don't need the income. So I'll go for accumulating. Does it sound like a good decision? Our phase of life right now, we are still working, and
and especially because you have like 90-something% equities. And you have other investments diversified. I know of your other investments. Higher risk or lower risk. And you have private investments. So I think this is a relative good diversification option for you.
For me, right? At least say for all you guys, right?
You and B.
Actually, so now we're dealing with B, because I'm using her money right now.
Just promise B that she will get the income from it.
Eventually.
No, but you're using SRS. There's no income. You can't take out money.
Well, you put.
I just realized it's SRS.
There's no point putting income, right? So I'm waiting for it to hit 1,500. There are 41
left. That's a great
left.
question. Let's answer this question. This is, does 1 million CPF OA count as accredited investor? The answer is yes.
Oh, yes.
And then there's a lot of flowers from somebody. May I ask why one can lose money investing in Endowus Cash Smart? Okay, so just like income has 3 different options on the portfolios that Endowus offers: stable income, higher income, etc. Cash Smart has 2 options, so it's the more stable, safer one. The safer one is almost I say impossible to lose money, because it's in cash funds, Fullerton Cash Fund, which is like investing in institutional deposits into banks. The ELF, the Enhanced Liquidity Fund, is in short-term liquidity and is priced in a way that has really rarely lost money. But if you're in short duration bond funds like UOB SGD fund, which is very popular ultra short duration product that is a part of the CashMart higher yielding choice, when interest rates rise, then in the short term you can temporarily lose money, but in the long term CashSmart solutions should not be losing money. So we've had periods where it has lost money, especially when interest rates rise, and especially when interest rates rise very rapidly. But I talked about this a few years ago, and I think it's been generating good yield because we've been hitting about 3% plus. United SGD fund has been giving 3 to 4% yield as well. So I think that we're not in an environment, especially if the next movement in interest rates is actually down, then we've had periods in the past where United SGD and the short duration bond funds have generated 5%, 7% because interest rates have been falling. So you actually have a tailwind of interest rates falling and maybe some oomph in returns for those guys. Yeah.
Okay, so I can't wait anymore. Okay, I'm gonna try.
1,464 likes.
Yeah.
It's almost there. We rounded up to 1,500.
What's holding the other 1,000 people back? There are 2,000 people watching right now, right? So I'm gonna try, right? So if I want the PIMCO income fund, oh well, man, I don't know how to spell PIMCO. PIMCO, and I type income, right?
Yes, yeah.
And I hit search. And I hit build yourself, FundSmart. I put SRS. I don't see it. Oh, is it a low duration?
It's below.
Oh, oh, no wonder.
Yeah, so you have to.
Okay, this is a distribution.
Accumulation.
Oh, man.
Sorry, I pressed.
No, it's me. It's me.
Oh, you did it.
Let's do it again.
No, not that one.
No, not the one.
Go back to yeah. SRS.
It's the okay. Let me try it. Let Uncle me try it. Okay.
And then you have to type it. Just
okay.
Type it,
PIMCO
income.
Man, I don't know how to spell income. Okay.
Huh? Where's it?
How do I spell it? Okay, let's try again. PIMCO.
GIS. Let's do GIS.
GIS.
Space.
No, wait, autocorrect. GIS.
Okay, let's just search here.
It's here. Okay, I click 12 more.
And then just
this one, right?
Yeah. Accumulation. Found it.
Let's go.
We're almost at 1,500.
Okay, let's 7 more. Don't panic. No, this time I got 5 pairs of eyes looking at me. I can't go wrong.
Don't panic.
So I found it. Okay, it's called PIMCO GIS Income Fund. Remember. I better say disclaimer.
I'm losing it already.
This for me, not for you. Okay, yeah. You don't follow me. Yeah, follow me, sure lose money. Okay, so I hit buy fund.
Yeah.
Okay, wait. I gotta show it, buddy. Okay. Oh man, once I go back, I got to. I cannot click go back.
Somebody said away account not liquid. Yeah.
PIMCO.
Sorry, that was Sheng-Shi, not me. I'm blaming my colleague.
What did I do, man?
Yeah, OA may not be liquid. Maybe,
okay,
I don't know.
PIMCO.
Please reach out to support@endowus.com because we don't know.
Okay.
What happened?
No,
you're doing it.
Yeah, okay, here.
Yeah.
This account, right?
Accumulating.
Okay. Yeah, roll up.
Roll up. Okay, wait. I got it.
Oh, no. Wait. What did you chose? Yeah, next.
Next.
Yeah. Choose
3 or more.
Yeah.
Okay.
And then risk is fine. Just put it anywhere.
Okay.
How much?
Wait, are you sure I'm buying the right one? This time, okay, I'm gonna start at 50.
You have at the end. No, you put everything because you're gonna put 50 in the other one.
Yeah. And then I click next.
Okay, PIMCO income, yeah. And then you look up, screenshot SRS. 50,000.
Okay.
You wanna show? Yeah.
Okay, you know what?
He's almost there, guys. He's almost there.
Most expensive tutor class. I've got I've got a chairman of Endowus playing customer service. Two teachers.
It's 10 o'clock, so I'm normally in bed. So
okay,
it's okay.
So I'm gonna fire up. Okay, so I'm gonna fire 2 shots. Okay, so first one 50K. Okay, at a PIMCO GIS income fund. How do I know it's hedge or not hedge?
It's accumulating.
How do I know it's hedge or not hedge?
It's all SGD hedge.
Oh, it's all SGD hedge. Oh, that's good. Okay, so I'm going to say confirm.
Mr. Liu, put my code.
Put my code.
There's no code.
Okay, there's no code, right?
Please, please, account.
Yeah, just press that.
Okay, let's go.
Done.
Yay! Walao eh, si be siong ah, kencong ka be si. Walao eh, it's frightening. I'm not gonna. Okay,
so
done.
somebody asking for my contact. My colleagues like my answer with the way I don't know the answer sometimes. My colleagues know better than I do.
Okay, so this is the first one. Once you hit 1,700 thumbs up, I'll fire the next shot.
Mr. Liu, better you let your wife do it.
B, you sit down later and do it in front of everybody, okay? Yeah.
Well done, Uncle
Okay.
Liu. Well done.
Okay, so I'm good in AI, but I'm not good in this. Okay, yes. So, okay, so any more questions?
Accumulation,
Yeah,
not distribution.
I don't have time to wait for everybody. 1,700 thumbs up, I fire the next shot, okay? Yeah, which fund? I already told everybody. I just fire into the PIMCO income, GIS income accumulating SGD hedge fund. What is shit long mouthful, man? Okay, slowly type. Okay, would you say lump sum investing apply to unit trusts as well like bonds? He answered the question just now.
Yes.
Rewatch it, okay? Any sign up promotion code? Yes, there is. Go and look at the
Downside,
YouTube
down
description.
here, right
Okay,
here.
YouTube description.
Right here.
PIMCO income fund got used leverage. I think if you read in the prospectus, they use some leverage.
Very little.
Some.
Very little, yeah.
Okay, what's the turnaround time confirmed for the purchase? That's a good question.
So unit trusts are normally T+2. So put the trade in and then within 2 days is settlement. But when you put the trade in, then your investment will hit that day's NAV. So your investment is effectively the next day you're already invested. So there's a cutoff line. So invest this late in the evening, then maybe it won't go through today. So it'll go through
Tomorrow
first thing
morning.
in the morning.
That's
so
fine.
it'll be tomorrow's NAV. But remember, it's not like equities where the movements are higher. Bonds don't move that much.
It doesn't matter. It doesn't matter $9.33 or $9.45 or whatever. It doesn't really matter.
33 or 32.5.
Yeah, there's not much. No, there's not much difference. The second, I'm gonna fire.
Good night, going to sleep, watching from Melbourne.
I'm gonna fire the next shot. Okay. I want everybody to. Okay, 1,600 thumbs up. I'm gonna because I was so sian already. Yeah, so I don't want to waste too much time. I want to ask. Just now there was a very good question. This is not an AI. This is not an AI fund. This is not an AI fund. You can just invest in 1,000, right?
I think people who are accredited investors. Singapore has one of the highest ratios of accredited investors, and so I think there's a lot of AI investors who want to know. And so please reach out to Endowus. The Endowus Private Wealth Services are available to people who have a certain amount of investments or they're accredited investors, etc., etc. So the best way to find out, and as I say, I think is much better. My colleagues are much more intelligent, much more knowledgeable than even I am, and they're catered to helping you and serve you in the best way. So please reach out to our people.
Okay,
my colleagues.
There's a very good question. How long should we hold the fund? Now, okay, maybe I'll give the second part of the question is for S&P 500, Nasdaq, and a lot of the equities fund. You want to hold them as long as possible.
Yeah.
Does this apply to bonds?
So it's the same thing with equities. So a lot of people, it's why you invest. So if you invested in equities and you had a certain target, like you want to get 20% return, it could happen in 1 year, and then you want to sell and do something with it, that's fine. But if you're investing for the long term and you don't have use for the money, then you should be investing into perpetuity as long as you can, because equities doesn't have a maturity. It's forever. And companies keep growing and compounding and gives you even more returns. And the returns layer on top of each other, which is what compounding is. Fixed income is the same. Fixed income is lower returns generally, but stable returns and less volatility in returns. So if you are looking for only 1 year investment, then the most you can get is 5, 7, 9% or maybe 10%. But you're not going to get the 25%, 50% returns that sometimes you get with equities. And so, you know, it depends on what you need and why you're investing. If you're investing for a 10% return, yeah, of course you can take the money out afterwards. But if you continue to generate 5, 10% return every year, it compounds, obviously, which is great for you over the long term. And sometimes you would use it just to diversify during certain cycles, and then you would go back into equities, or you change your allocation depending on the risk you're willing to take. So I think everybody is different. The way you invest is different. The way you used fixed income is going to be different as well as a result. Yeah.
Okay, so let me repeat again. Mr. Lu does not get any commission, and I already got
referral.
No referral, nothing, not one umbrella. But I do get very nice char siu fan. Okay, that was really very nice. Huh?
And you can get an umbrella as well, but yeah, I think we ran out. So you get a, what is it? The flask today.
The flask, yeah.
I gave you a flask today.
Yeah.
As a gift.
Okay.
5-year anniversary thing.
How do I? Okay. Can they use CPF OA? They can't, right? For
CPF
any of the PIMCO fund.
Oh, PIMCO is not included in CPF at the moment because of some CPF regulations. There are other fixed income products that are available, and so please reach out again. Like, there's a lot of CPF included funds for your OA investments. Yeah.
Okay.
So we crossed 1600. Oh, we haven't, but 1545.
Yeah.
After this. Yeah.
Okay. So I'm gonna just fire the next shot.
Thank you. We fired invested small amount for support.
Yeah. So again, I'm not asking you all to follow me. None of you all should follow me. Okay. None of you should follow me. As the best disclaimer, I say you follow me, you'll lose money. But once I say that, if MAS look for me, I always tell everybody already. Okay. So I already done with the PIMCO GIS income fund. I'm gonna go for the next one. Okay.
You're gonna do capital security.
Yeah, I love that. I've done a lot of research on that. Okay. So yes. So I'm going to now do step by step, okay? I now do step by step. Don't follow me. I'm just teaching you the step. Quick lah, patient lah, okay? So this is the PIMCO GIS Capital Fund, okay? So I click into it, okay? It's called a PIMCO GIS Capital Security Distribution. Distribution is wrong. I almost got the wrong one again.
Oh, I think that one only has distribution.
Oh, really?
Because it's yeah. It's okay. We can reinvest it for you. Yeah.
You can?
You reinvest.
I physically have to reinvest.
I don't know, actually. You can ask my colleague. The distribution will come into your account and you can just reinvest, yeah.
Okay, anyway.
It's not that difficult.
So I'm going to go for it.
Not that difficult.
Okay. So once I reach here, this page, okay, I click buy fund. Okay. And then I got to show mid to long-term investing. Why do you need to ask this question anyway?
Because we're seeking advice.
Okay, so I do this, and then how high is your risk tolerance? I go all the way to more risk, okay? And then I put a one time. This time around, I'm not going to put the wrong amount. Okay, I'm going to put 47,000 because that's all. I'm milking my wife dry of our SRS. Okay. And then I confirm.
SRS
and confirm, and then OTP. Done.
Your goal is set. Done.
It's just to be sure. This month I fired a lot into Endowus, right? Did I?
I don't know.
Sir, did I? Oh, you don't know, right?
Because Brandon and Ben. The
PMB. $250 US. What? It's almost 500,000, man.
Really?
Yeah. It's almost 500,000.
That's why I bought char siu.
Yeah. So big shots into it, okay? But the other ones are AI funds, so I cannot talk about it as well. Okay. So any other questions before we sign off? Okay. So any other question? Just 5 more minutes for a quick question, and you buy the same fund. No, 2 different funds. Okay, what is the code?
Again. Please? Yeah, you can watch again.
Yeah,
income fund and capital securities.
Yeah. Okay, so there's nothing to congratulate about. Maybe after I buy tomorrow, go down. Yeah, there's nothing to congratulate about. Okay, no. Endowus.
The tier is based on all your assets. Thank you for that question.
Okay,
Any good questions from above?
Yes. For fixed income fund, how do you determine the intrinsic value and decide the point of entry?
So
that's a good question.
Not us. I think it doesn't matter when you invest, because the fund manager is always optimizing the portfolio, so that they will be buying the bonds at an attractive price, selling it if they feel it's overvalued or has given them good returns, and find new opportunities. Because unlike equities, for example, Apple will only have one stock, but Apple issues many different bonds. And every bond will have different covenants, will have different yields and interest rates depending on when they issued it, different duration and different types of, currencies. And so, there's thousands of, hundreds of bond funds for the same company, and investing options and availability and ability to generate better returns always exists. So Neuberger Berman Strategic Income Fund is a good fund. Man is a great fixed income fund manager. We have Aberdeen, we have Acadian, we have Schroders. We have so many great fund managers that are available on the platform. So please reach out to our client advisors or support@endowus.com, or play around with the app. It's actually quite fun to play around. Look at the different returns, historically, 1 year, 3 year returns. Look at annual returns. Why did it go down in 2022? Why it did really well last year, and which ones are doing great this year? And try to understand it. And if you click on the fund page, then we have a rationale. So we have a write-up on why we think this is a good fund, what the fund is supposed to do. Look at the underlying components of the investment. So is it in primarily the US, or is it an Asia credit fund? There's emerging market credit funds, emerging market bond funds, which have done really well over the past 1 year, for example, as China recovers and emerging market recovers. We have frontier bond funds, which is even lower in size than emerging markets. So very developing countries, and their bonds obviously are going to be priced much more higher, giving you higher yield, but also opportunities for arbitrage or alpha generating ability. So frontier market bond funds have historically, in a stable environment, given you double-digit returns. So there's a lot of different options, and so great opportunity for you to use the Endowus platform to learn about fixed income and the various bond fund opportunities.
Okay, 3 quick questions.
Yeah.
Number 1 is when we invest into let's say S&P 500 bond funds through Endowus, how long does it take? You must have answered this question. Let's say we buy today.
Yeah.
Okay. So how long does it take?
So the bond fund settlements are T+2 in general. So as I explained earlier, I explained this earlier.
Yep.
But when you buy, like tonight, it's already too late. So tomorrow morning, the orders will be placed. When you place the orders, the NAV, the price at which you buy, is determined at the end of that day. And therefore, you're already invested, although the money is settled and reflected in the account maybe the day, 2 days after.
But that's for bonds, right?
Bonds or any kind of funds.
Or equities,
so some
anything.
funds are T+1.
Okay.
So it could be reflected the next day or settled the next day. Some funds are T+2, but that's depending on regulations, what kind of funds they are and who the fund manager is, etc.
Okay.
So not to do with Endowus, but be sure that if you invest in the morning before the cutoff time, then it will be invested on the same day at the NAV at the close of that day.
How long? Okay, there are some customer service questions.
Yeah, customer service, just reach out to support@endowus.com.
Support@endowus.com, okay? Yeah.
Because they know better than I do.
Okay,
Yeah.
so there was one question, it's a very good question. Why is the billing agent UOB Kay Hian?
Yeah, so the reason is because Endowus tries not to touch your money. So we never touch client assets. It's to keep your money safe. UOB Kay Hian obviously is the largest local broker here in Singapore, backed by the full balance sheet of UOB Bank and the group. UOB Kay Hian is also the CPF fund administrator. So just now we used SRS money. CPF, OA, SRS monies have to go through a CPF fund administrator. that is included into the CPF investment scheme by the MOM, Ministry of Manpower, and therefore UOB Kay Hian is our partner. The reason UOB Kay Hian is our partner and not iFast or Philip or Navigator, Dolodex type guys, is because they all work off of trailer fees and commissions and retrocessions. UOB Kay Hian is the only guys who refused or agreed with us that trailer fees are not a good thing, and therefore they were included into the CPF Fund Administration to enable this low-cost investing that Endowus is trying to propose and make available to a broader client base. And therefore UOB Kay Hian are the ones that custodize, very much like private banking. They have all the money is sent to UOB Kay Hian, and then UOB Kay Hian sends to the fund manager to make the investment into market. All your cash is managed by HSBC. So UOB Kay Hian moved to HSBC. So HSBC manages the cash. UOB Kay Hian does all the transactions and execution and custody, and then the money is invested into the fund manager. So it's in the capital markets, in bonds and equities. So PIMCO will manage that. So Endowus never touches your money. So there's no risk of losing money from Endowus. There's no way we can tap into your assets.
So even if Endowus will go down,
UOB Kay Hian will have that asset. Well, the fund manager, it will be in a PIMCO income fund under your name. And therefore you can access it with any other broker or any other platform because PIMCO will know that it's yours. But if you want to use UOB Kay Hian, who's the largest local broker, backed by the UOB balance sheet, they will have full access. They will continue to manage that account, the CPF, SRS, and cash accounts that you have with Endowus will be taken on by UOB Kay Hian. So it is actually the safest way to build Endowus, we thought, and it's the best way and safest way for our customers.
Okay, very good. There's a lot of customer service questions. Please ask at support@endowus.com. I'm trying to talk about more strategic one. One last question, okay? Because of the AI boom and tech boom right now, what is a good a fund in Endowus to go for?
Sorry, AI?
AI,
boom?
yeah.
Okay, so there are technology funds that have done very well, and so the technology funds gives you broad exposure. A lot of them own the usual names that we know, like NVIDIA, which builds the semiconductors, Microsoft, which has a major stake in OpenAI, et cetera, et cetera. And so, and Meta, for example, who has, or Google or Tesla or X, et cetera. And so, having broad exposure to the technology sector, there are great technology funds. There's AI specific funds, but I don't know whether they have a greater exposure to AI than others. The bottom line is that there's very few ways to play AI. A lot of the companies are new and they stay private. So venture capital funds are heavily investing into the AI space. And so, private equity funds and venture capital funds are, we have some, again, for Endowus private wealth customers who are accredited investors, there are some opportunities for you to invest in this space. But for public equities, I think there's limited exposure, and the usual suspects is where you're going to gain exposure.
Wonderful. Okay. So I think this will be a last question. Now I'm going to do another live stream again and answer some of these questions that don't require big guru, big shot to answer. I'll try to answer some of those other questions that you have, especially the difference between this and that fund, that kind of thing, how to press the right button, that kind of thing. Some of it I don't know whether I can do it or not, but what I'll do is that I'll definitely try as much as possible to answer some of the questions. But remember, the best way to do it is to go for support@endowus.com. Okay, yeah. So if you don't come to me, and don't go to Sam. I'm not going to give you his WhatsApp number. Okay, yes. But really, I think tonight we are very privileged to have Sam here to answer all these questions. We look forward to him to help us when there's such an opportunity again. So, let's everybody give a cyber clap to Sam for coming in. Okay, yeah, we talk all the way to 10. 2 hours. Yeah. 2 hours here, 2 hours of his time is like $2 million. Yeah, He's such a big shot.
Thank you everyone for listening. Thank you for joining us. Thank you for staying the full 2 hours, and apologies for the delay at the beginning. It's my fault normally.
No, it's not.
but it always happens with me. I don't know why.
I don't know
Twice.
why,
Yeah.
but thank you. Okay, thank you.
Yeah,
Thank you all
you
for
so much,
watching as well.
everybody.
Okay, thank you for watching. Thank you, Sam, as usual.
thank you, Lou. Thank
You're
you,
wonderful,
Lou.
right? So remember, right? If you haven't signed up with Endowus, you go down and download the app Endowus from the Singapore App Store. Okay.
And it's the voucher or discount.
And
below.
yeah. The description there, you have
Link.
a $60 sign up fee
Below.
Okay. Yes. Okay.
No, not below.
What do you got?
Sign
First,
up discount.
bonus, sign up discount. I'm talking
Yeah.
about sign up discount. Okay.
Sign up fee.
Sign up discount. I'm talking about sign up discount. Okay. Sign up discount. But great, right? So I'm a quite a faithful investor since day one. Almost, I'm one of the first investors. I must be.
Yeah,
I'm talking about
sure.
as a client. Okay,
As a client,
Yeah,
as an
one of the
user.
first few clients. Okay, and always have always stayed with them for a long time.
You put in a lot this month.
Yeah, I put in a lot this month. You got
Your
thank.
hard-earned money.
Yeah.
And bees.
Yeah, but that's because of Ben. Ben said you got to go for it. Yeah. Okay. But anyway, thank you so much. Okay.
Thank you, Ben, in Seattle.
Thank you. Thank you, Ben. Okay. So thank you, everybody. Okay. Thank you, everybody. Thank you, everybody watching. 2,000 of
you.
you're staying with us for a whole night. Thank you so much, and to Premium Mall as well. Okay. Thank
Yes,
you.
Premium Mall as well.
Thank you.
Thank you, guys.
Okay. Thank you, guys. Okay. Thank you,
Thank
guys.
you.
Okay. We're gonna sign off right now. Okay. Thank you. Thank you.